Even in an AI-focused world, MacroEdge is in the business of focusing on you. We don't just understand our clients, we listen to what's said and illuminate on what's not. In a world moving at the speed of light, with shifting markets, evolving workforces, and non-stop disruption, MacroEdge helps you to navigate and identify novel opportunities, expand your enterprise, and succeed in tomorrow's world. And it all starts with you. Put your enterprise and your perspective in the driver's seat. We're in the business of you.
Good evening, everyone, and welcome to MacroEdge Radio. This is John Galt speaking. Another great show tonight. Before I bring our guest on, I just want to read some headlines to you. We've had another bank failure tonight, another small 150-year-old minority-owned bank in Philadelphia. You've never heard of it unless you bank there. So we'll move on to the other stories. I'm going to read two headlines. I want you to think about these headlines and think about what they mean. Retailers report disappointing sales in July as shoppers delay back-to-school shopping. Wall Street Journal. Walmart shares slump on weakest sales growth in over 6 years. One of them could have been from August 10th, 2007. The other one is from August 20th, 2026. I'll let your fingers do the walking on the internet, but everything is not as it seems. And as we're seeing this progression into the land of fantasy, we're going to talk about AI in depth tonight, the chip wars, the conflicts that are occurring within it. But I'm going to ask Dario to play along with me tonight. We're going to talk about the Anthropic and OpenAI IPOs that are forthcoming and save those towards the end of the show. It's called a hook in the radio business. We want to hook our audience in, but build the background towards this because I think Dario would agree. This is potentially one of the greatest indicators of a market top in almost 100 years. So Dario, welcome back to MacroEdge Radio.
Happy to be here, guys.
So let's start with what's happening next week. We have NVIDIA reporting earnings. I'm of the theory that they're going to knock it out of the park. The circular financing jerk around will continue, and nobody's going to question that except for those of us who actually have two eyes, two ears, and the ability to read a financial report and say, wait a minute, there's something going on. What's your take on what we're about to see next week?
Well, thank you for the question. So, first of all, actually, I don't want to disappoint you, but in reality, myself, and a few others have been discussing about this for many years. But in reality, there is a very big discussion going on right now in Wall Street behind closed doors about what's happening. The simple reason why they're not telling it publicly is pretty straightforward because they don't want to kill their golden goose till keeps laying eggs, right? That's the truth. So on one side you have all these like hyperscaler company. I mean, the latest news was about Broadcom, and I read Broadcom is planning to issue more than like $70 billion in new debts, right? And then you check the financial statement on Broadcom. Broadcom has roughly $150 billion of assets and already $60 billion of debt. And they plan to double the debt. And then you wonder, what the fuck, right? Why? Sorry for my, elevated English, but I'm a very natural person. So why this is happening, right? I mean, you know what? Have you ever seen a drug dealer telling a drug addict to stop buying? I mean, of course not. That's not good for your business, right? It's not good for your business if the drug addict buys too much and dies, or if you sell the drug and goes overdose, right? But you want to keep your client going. And this is exactly what's happening right now. There are all these like companies that are doing a very bad thing, the banks and the asset managers, okay, know very well, but they are in the business of helping them get what they want. And as long as they can get going, they're making a hell of an amount of money out of that. So, and it's not surprising that very slowly you're seeing that message trickling out from behind closed doors into the public with concerns, with maybe there is too much circular financing, whatever. Of course, because they have to start covering their backs, because at some point when shit will hit the fan, you know, brokers that sell that debt are as much as responsible of the companies that issues the debt based on some sort of like statements and filings and so on to begin with. And if you look at the lawsuit that has been brought against Oracle, that's a perfect example. Oracle issued bond. The next thing that those people that bought that bond heard was a toilet flush, because they went straight down to the drain, and then they sued. And to be honest, they should lose that lawsuit, because the people that bought that were all, in theory, very highly professional investors. But why they bought them? They bought them because they're not allocating their own money. If you ask to any of those people, would you ever buy like a Oracle bond or a Google bond at this price, a Core Wave, Nibis, whatever? They would tell you, no, shit, no. I'm like, then why are you buying that with your client's money? Because that's how I clip the commission. And they show you the mandate. They're like, see, perfectly fine. They tell you, they give me that money and I'm fulfilling my mandate, so I'm cool. All right. If this is what it is, go ahead with it. But you're going to expose yourself to several other stuff. So to conclude here, people are discussing this a lot. That's the truth. They cannot piss off their clients, otherwise they give the business to someone else, and this is a very profitable business so far. I mean, year to date, the hyperscalers are issuing so much debt that they are competing with the freaking United States Treasury for net issuances in the market, and quickly they became the largest issuer in the investment grade bond space. Plus, you still have a very long pipeline of IPOs, a pipeline that, in my opinion, most of which is not gonna even see, it's not gonna even like smell the opening bell at the Nasdaq or wherever they want to list, because I mean, those companies, they don't have enough runaway or baking or whatever to get there. But still, there is a lot of business to be made. So, this is what's happening right now. I hope I haven't been too blunt.
No, actually, we prefer blunt because let's face reality, Dario. There hasn't been enough blunt introduced to the American public to understand the depths of what we're facing. And I'm going to go right back to the meat of it. I'm not going to talk about what Trump said about credit today and all the other nonsense that's going on, although he did say that military intervention in the bond market is an option, believe it or not. Cheer that one on, America. The truth is that we're facing a new reality that's the old reality. And when one takes a look at it, the same people who gave AAA, AA plus, et cetera, ratings to the crap derivative instruments and mortgage-backed securities, be they residential or commercial, that created the last financial crisis, are the same ones giving those ratings and blessings to the current hyperscaler debt, putting it on par with treasuries. And there's this theory that a Facebook or slash Meta or somebody can't go bankrupt. I'm going to throw the name out here just for the hell of it, but how many of you are still holding Netscape or AOL stock? When you start looking at the bigger picture, Dario, is there an overconfidence that the government will always bail everything out in the end?
Well, the answer to your question is definitely yes, because um, that's what everyone has been doing for a while. Although, to be fair, well, you guys don't take this in the wrong way, but you know, there is a little bit of split that is starting to happen between the West and the East in this regards. In the West, you have, you know, companies, but I mean, no, we're talking about AI, but to be fair, car companies. I mean, I remember Chrysler, GE's, um, sorry, General Motors. Then you have the banking crisis, whatever. So companies, like in general, when they have problems, they run to the government and they say, "Listen, if you don't bail me out, I'm gonna fire this amount of people, and this amount of people they they belong to X amount of families. You're gonna lose X amount of voters." Okay, so this will make you lose the district here, potential election here, and on and on and on. Of course, when you have big companies, you know, politicians at the higher level, they are very sensitive to that, because this is the truth. And in particular, they're very sensitive, not just to workers being fired, because at the end of the day, you know, those votes, you can make the dump somewhere else in some other ways. But when you have hundreds of thousands of people investing, and if these people lose their money, they get angry. Okay. And in a human psychology, people are not going to blame themselves that they did something completely stupid when somebody else was warning them not to do so. Okay. So you have all this amount of people that, if they don't get their money back, or at least part of it, gonna be very angry and vote for somewhere else. So this is why, like, everyone gets a bailout, to be fair. Right? Seriously. I mean, and this is very wrong, because effectively, instead of, like, you know, the economic cycle is meant to go through cycles of boom and bust. And the cycle of busts are as important as the cycle of boom, because with those cycles, they weed out all the, you know, weak companies, bad companies, and whatever. And then the following boom cycle is stronger, and on and on. So this is the West. On the East side, this week we had a news. And the news is sorry, that the former richest man in China, that was the chairman of Evergrande, not only didn't get a bailout, not only didn't lose everything, he has just been sentenced to life prison. I mean, and I mean, it's not an isolated case. Okay? It's not that they found a scapegoat. And to be fair, that's not only in China. It happens when these things occur in different shape or form. They happen in South Korea. They happen in Singapore and other places. Okay, so you see the split of approach here. By the way, there is um, an exclusion that we have to make with regards to Asia. That is Japan. In Japan, everyone is getting a bailout over the past 50 years, and they will continue doing so till, sadly, because it's a very nice country, very nice people, but you know, it looks like they don't understand that they're sinking under the weight of their own debts. So what is keeping them alive is also killing them at the same time, paradoxically speaking. So this is what's going on. So nothing surprising about what the AI people are happening. You can tell they are day after day after day portraying them as they are too big to fail, right? And then actually I posted this thing a while back, and then I said, guys, you think that Nvidia is too big to fail? Just compare Nvidia balance sheet with JP Morgan balance sheet, with Citigroup, with Bank of America, and whatever. Nvidia is not too big to fail, by far. That's the thing. Like as a entity for the economy, okay, like they are making a very big mistake in confusing the size of the operation of the business with the market cap. So two very different things. I mean, imagine tomorrow if you have Nvidia going bust and Walmart going bust. Okay, only one can get a bailout. Which one is gonna get a bailout? Right? So
You nailed it. And the problem I don't think people understand is there have been, we'll go back in technology history. And sorry, I'm getting back on my soapbox and preaching. But Dario, RCA was too big to fail. They no longer exist. Zenith was too big to fail. They no longer exist. The number of companies, technology companies that were quote unquote high tech in their day and age that have evolved, grown, become too big to fail, and gone away is too numerous to count. So when you start seeing some of the games that have been played, such as CoreWeave, etc., you have to ask the question, how much longer will their financial viability not be questioned? And at what point does our government start picking winners and losers? I think we're nearing that nexus. What do you think, sir?
um I mean, this is not a very easy question to answer at this moment, because the way the U.S. government is taking decision at the moment, it doesn't look like very rational to me, to be fair. With all due respect, but you know, one thing that I believe people tend to make the mistake is that they rationalize something that is not rational. So your question is pretty much on point, but the answer is like, I mean, yes, they should be doing this and that, regardless whether they are Republican, Democrat, white, yellow, or whatever color, red they decide. But then I know there have been certain circumstances where, I don't know, the straightforward answer to a question, I don't know, what's the letter that comes next? A. And the answer is B. And then what you get from the other side is like, no, the answer is H. And you're like, why? Because I'm the president, because I'm the secretary, or whatever, stuff like that. Right? I mean, yeah, I always tend to like make these jokes in this example. But as a matter of fact, like these dudes, they are taking decision more and more not on what is rational to be done, but eventually what is more convenient to be done for whatever reason. So paradoxically, nowadays, and like all the times, to be honest, it's always the same. I think about 2008. The first banks that got in trouble, they got a bailout, right? And then at some point, everyone wanted a bailout, and they're like, okay, wait, we don't have enough money to pay. We need to chop ahead and make an example for everyone. And then they picked Lehman, and they made even a bigger mess. Okay, for, it's not the topic of today's discussion. So paradoxically speaking, I think that if someone, so all these people, they are trying to portray themselves as strong, as too big to fail, whatever. I got great business. We're gonna like make trillion of quadrillion of dollar of revenues, whatever. So sometimes when I read those numbers, I wonder, but do they really mean US dollar or some other currency like Korean won, Japanese yen, Vietnamese dong? Because if they mean that currency, it actually makes sense. They're gonna make trillions in Korean won. Okay, fine. I mean that I would agree. But in US dollar, dude, I'm not sure. Like, I mean, that's way more money that the economy makes. And to be fair, you're not creating anything new that is going to expand the economy. Because that's the thing that these people do not understand. They're not creating anything new. They're not, they're not taking a potato off the ground or creating a new machine or a new widget and whatever. Like these people, they effectively will have, they will mostly live off clients that are corporates, and these corporates need to make revenues from the real economy selling real things. So eventually they will help corporates to become more efficient, maybe more productive, to cost code, whatever, to increase their margin. But the top line, that doesn't change really in the whole economy. So where are you going to get that money from, right? You're going to take it away from eroding from other businesses. But that's one thing. The other thing is to grow that back. So now they're doing all this game because they need to go IPO, because they need to raise funding. So people need to realize what's going on here. I mean, you cannot go in front of like insurances and whatever, asking them money and say that you are shit, right? They're not gonna give it to you. And you need to tell them you're gonna be great, whatever. And then like they look at your presentation and they see that it resembles like the shape of a toilet paper, and they start wondering. But then you convince them that that is not toilet paper. You convince them that that in reality is a new futuristic like type of paper that you used to present such an innovative idea that they don't even know, and whatever, all this like pitch. So this is what they're doing now. But paradoxically, the one that goes in trouble first is the one that is going to get a bailout. That's exactly how it works all the time. So if you have to fail, it's better to fail first, and you get bailout, rather than trying to drag to the end. And then people are like, okay, dude, hold on a second. Why should I bail out this, I bail out that? And why should I bail out you as well? Maybe you're like a big data center building, developer, or you're developing this. Because at that point, especially in the West, you need to come down to the fact of, okay, how many votes I get if I bail you out against how many votes I will lose. I mean, if I'm bailing out a company that, okay, maybe is a big donor, they're gonna give me a lot of money for campaigning, but then I bail out the company that is building data center in the backyard of everyone. This data center are mostly like not gonna be used, and they're like creating problem with the water supply. They're sparking electricity costs or whatever. You have more and more states in the states that are banning new data center construction, and that they are stonewalling the um, approvals to build new ones because people are getting pissed. So, okay, should I bail out you because you're giving me that bunch of money to go campaign, and then try to convince those people that I pissed egregiously for bailing you out that I should have bailed you out for their own good? To be fair, this hasn't worked very well before. So, I mean, we are heading into that situation. And you mentioned a name, CoreWave, that it's an amazing example because that company, I mean, in the meantime, the share price was going up. I mean, no one is looking at their bonds. I realized. Did they realize that their bonds are really like they almost lost half of their value already? I mean, that company is rated investment grade and is currently trading not It's not even a high yield. It's trading as a distressed company. Like people are taking the measure to build the coffin for the company already. But of course, if things snap all of a sudden, the company is going to be swallowed by the bigger dudes. And then there's going to be a second one. Okay, which one takes the nest? Like CoreWeave is going to be the Wachovia. And then Nabius is going to be the Bernsters. And then we're going to have and on and on. And then at some point, they were like, okay, dude, you are the Lehman. Game over.
You threw this out, and it's great because I didn't get a chance to bring it up yet. But if you look at credit default swaps on the hyperscalers and the computer slash chip suppliers slash intermediates, some of that stuff, like you just mentioned, CoreWeave, is trading like a 2007 housing bond. Yet it seems that nobody who is a quote unquote retail trader wants to pay attention to the publications that highlight that. But as you say, professionals are somewhat laser focused on that because credit always leads equities, be it by 6 or 12 months.
This is very funny. Actually, you pointed out a very good thing because I had this conversation several times with people. And then I told them, so you're investing in this company. Okay. These companies have asset liabilities. I'm like, yeah, sure. On the liability side, what comes on top? Equity or debt, right? And you might be surprised, many people do not know how to answer the question. That is quite paradoxical. They don't know that the people who lent money to a company, they have to be repaid in full first before shareholders get anything. So, and this is an incredible case of the debt holder already discounting significantly and being aware of the risk they might not get all their money back, while the equity holder still values these companies based on, I don't know, I don't have like a good example right now because clearly they're not, evaluating them based on their future business because that doesn't make any sense. I mean, this company is losing more and more money, worsening their margin the more revenues they make. I mean, what kind of business is that? It's like masochistic business that you enjoy more pain till you go and that it rewards you for some sort of reason. I mean, that's not how it works in business, to be fair. So if bond investors already think they're not going to get all their money back, how much the equity is worth? So it's a zero, okay? Maybe like a little bit more than zero. It's at 0.1. But that's exactly what's happening.
I don't think people understand that, to be honest. They don't understand the hierarchy that it's at the top, credit, secondarily, prime preferreds, and finally, common. And I don't think there's been enough education of the Robinhood speculative investor, deliberately, I might add, that keeps the delusion rolling. Yet you and I talk about this like, gang, credit is sending a signal you might want to pay attention when the second and third derivatives are saying we have an instrument which is at higher risk than normal. And according to the government, to the agencies, there's no distress in the system, but the credit market says otherwise. Tell me if I'm wrong, but you and I listen to the credit market every time.
I mean, of course, totally. So there's another thing that is happening right now that we should never forget, that central banks are printing a lot of money, no matter what they claim. I mean, they say, oh, we're not printing money, we tighten financial condition, whatever. And then like stupid dudes like myself, they point at the M2, the global M2 money supply and on the indication, and they're like, why that's growing? I mean, is the data provider wrong? Is there something wrong with that? So why do you think that is growing? Is because money is being printed or because money is being trained? And on and on. So there is there are two things that are a little bit perverse right now. This what first thing is there is a lot of money still printed in the ecosystem. Okay. And this will continue to be the case. I mean, guys, the US just had alpha freaking trillion deficit in a month. I mean, in a month. How do you finance that? Okay. Who's gonna buy their bonds? Okay, yeah, the Fed is not running QE. Yeah, sure. We're in a global central banking system. That money comes from somewhere. And they like are pulling all the lever, like reducing, banks' leverage requirement. The Bank of Japan, the Bank of England, and others, of course, keep printing like drunken sailor, and that moment that money flows into the debt market and whatever. So I hope no one argues against that. We have a lot of money that here and there has been printed out of thin air. Reason why the inflation is still so high because inflation is a monetary phenomenon. Stop printing money like they did in China a while ago, and you get this inflation, and then you get deflation, and they tell you no one is like have any issue with that. That's a funny thing, by the way, because effectively that benefits the people. And as you can see, you can still have giant companies that make profits in that environment, something that they don't know anymore how to do in the West because they got used not to repaying their debt. While in Asia, if you don't repay your debt, you end up in jail and shamed for your whole life because that's the truth. So they're printing a lot of money. Now, where is all that money going? Okay. That money, like, like the great Nobel Prize for idiocy, Ben Bernanke, because that is what he was awarded for, to be fair, he said, we are going to like print a lot of money, we're going to inflate asset prices, and then that is going to benefit the economy. And the result, of course, as an academic, you should have known that all the times this was attempted in history, it created a massive K-shaped economy with inflated assets and the real economy down the toilet. But he got a Nobel Prize for that. I mean, the last time I checked, if you like fail at your questions in a test, you don't pass, but somehow he got the highest award. But anyhow, we're literally still doing what Bernanke at the very beginning said, everyone. Okay, fine. So you get all this money. So where all this money goes? This money goes in the pocket of some equity investors or some bond investors. And then there is like the category of private credit that, to be honest, what do you think all those people that they lost their job in 2008 and they were like making so much money in the subprime market, CDO, CDS, whatever. I mean, all those people are in private credit. Just go on LinkedIn, check the names. You will just see the same people with 20 years like older. Okay. Those are exactly the same dude running the same show, doing the same thing. All right. So you have this money trickling down in pockets. So the pocket of the debt investor, because honestly, there are a lot of very stupid debt investors or some investors that they have so much money that they cannot keep it in their pocket, like insurances, but they have to put it somewhere at some point. So they start picking the thing that, everything looks brown. They hope they are picking chocolate and not shit. That's exactly what they're doing. But they need to pick something because they cannot pile up on a lot of liabilities without having the assets. So otherwise they make losses. So this money is streaking everywhere. And then what's happening right now, why these companies are staying afloat? I mean, look at what happened to Nebius this week. Okay. We said that bond investors are already discounting the fact they might not get their money back. But equity investors, they don't see that coming. So where are you getting your money from? Nebius just issued $4 billion of convertible notes that, by the way, is an equity instrument. Some people think it's a fixed income instrument. In reality, it's traded by equity traders and people that want an equity exposure by that. Or you saw CoreWave and plenty. Even Google issued shares, for God's sake. A $4 trillion company issued equity. I mean, seriously? That's exactly the thing that's happening. So they're like, okay, bond investors, you think I'm crap, you don't give me more money. Fine, you have all these people that are gonna give me still money. So I raise equity. But then these people that give them money raising equity, they don't realize that that money is gonna strengthen the credit of the company first and benefit them bondholders first, that eventually might have less losses down the road. And they don't get these mechanics. All they get is this money that keeps going around, and they have to, put it at work, because in a high inflationary environment, keeping cash in your pockets, you're losing money. Effectively, you're losing purchasing power. And the last thing I want to add, then there is a kicker this time around, is all this company, they are really working in a gray area. They are really bending all possible rule of accounting to their favor. And in the quest of doing so, now there is something that they can legally do, that is keeping over $1 trillion of liabilities outside their balance sheet. So all these companies, especially the hyperscalers, are like, oh, I'm investing like hundreds of billions of capex, whatever, year and there, and on and on and on and on. And then people like do the math, and it's like, okay, 1.5 trillion deploying the economy, like this, and this, they invested all this 100 billion. Where the hell the other money came from? And then you realize that this money has been borrowed by them themselves, but it has been borrowed using a specific type of legal structure that doesn't attach their name to their debt yet. But once the bills comes due, who's gonna pay for it, right? If they're not gonna pay for it, then people are gonna suck up the losses. Who's gonna suck up the losses for all that off-balance sheet that given by all those private credit people, whatever? They're not gonna suck up themselves, because they're the managers. It's not their money. Who is that money? It's like pension fund and insurances. And paradoxically, pension funds are gonna lose money, while the people that are gambling in the market, thinking that if things go bad, they're gonna have a guaranteed pension in the future, they don't know the very same pension funds are gambling their own pension money in exactly the same shit. This was happening right now.
You just hit on something that Mike Nemeth and Dan Rubitsky wrote about and talked about. And believe it or not, boys and girls, Dario, all of us have been watching this out of the corner of our eyes. The private credit, private equity investment groups. What a life insurer last year went under. The allocations are decided by the state, not the federal government, despite popular belief. A woman who had maybe a couple million due to her in a life insurance policy got $333,000. Why? Because the investments that life insurance company made were questionable. So what does this have to do with AI, hyperscalers, chip companies, and the bull we're seeing now? The very same companies we're hearing pumped up for the American public have become the target of investments by life insurers and other insurance companies to get the yield they require to override the demographic curve. In other words, if you've got a $10 million policy, but you're going to live till you're 80 and you're 63 right now, you've got 17 more years, nothing to worry about, unless they fail to get 7% plus annualized to cover the number of people in the same age group you're in now. Thus why we're seeing the extravagant promises of yield, the gambling on Wall Street, the gambling with private credit, private equity, and exactly what Dario described. We're going to take a crap bond, a crap derivative, a crap investment program, put it off the balance sheet, promise it to investors, give you a 7 to 10% yield in theory, and then when it all said and done, if it goes under, the company doesn't get burned. The people who invested in the sidecars get buried. Does that sound about right, Dario?
Yeah, you said it perfectly. Well, one thing that I will add, if I may, is that another like incredibly indecent thing that happened is that because exactly what you described, pension funds have been allowed to take on leverage. I mean, they have been pledging part of their assets as collateral to leverage themselves in order to achieve higher return. And everything, like, think about it, all you described is perfectly correct. The society thinks that they are diversified because that's the whole thing, right? If you are diversified and a portion of your, you know, social system or pension system or whatever blows up, the rest stands and everything moves on. But in reality, they are everything is getting more and more concentrated. In the same way, I mean, the S&P 500, 33% of the S&P 500 is what, 10 stocks, right? That is not healthy. That is not supposed to happen. I mean, the very same thing is happening in other part of the economy with this behemoth, behemoths that are basically allowed to swallow everything. And this is exactly why regulatory authorities have been created a long time ago. This is a funny thing. I mean, 1929, crap happens. They create the SEC. Okay. And then paradoxically, the SEC mandate is to avoid that crap to happen again. And it's not only the SEC. I mean, many other authorities around the world. I mean, look at Korea. I mean, people were telling me, oh my God, Korea, man, is the future and this kind of thing. And I was telling them, like, dude, where is the Korea VIX trading right now? Oh, I don't know. It must be low and whatever. Check it out. When the Kospi was heading towards all-time high, the Korean volatility was going towards all-time high. At some point, trading above 90 with the Kospi doing all-time high every day. And then only after it blew up and 300,000 people in Korea got completely wiped out, over 1 million people got margin call and lost a significant amount of money. A lot of like younger people got their savings significantly impaired because that kind of speculation was mostly done by the lower part of the population. Some people went particularly crazy. They even remortgaged their houses. At some point, there were even reports of freaking people selling kidneys and blood and plasma to freaking buy options. And when everything fell apart, then the regulator said, "Oh, we should have intervened. Should not have allowed this, highly speculative leverage by triple leverage, four leverage, quadruple leverage, or all those sort of shit to happen." I'm like, dude, I mean, that was what you were supposed to do, but that's the thing that we were talking at the very beginning. People, sometimes there are stupid people. Sometimes people see the problem, but no one. I mean, why do you want to stop a market going up when everyone is cheering on that? They're gonna blame you. They're like, oh fucking hell, you're the party buster. You are stopping us from having these incredible opportunities for our economy system, whatever. We are all gonna get rich and whatever you do. You don't want us to have this. Why? And then once the crap is the fan. You're like, oh, you should have like done this. Why you didn't do it? I'm like, Jesus, like that's exactly the problem. And you only have very few countries where the regulators are still proactive in doing this stuff around the world. That's it too, because that's what they're supposed to do. And like, okay, you guys, if you do this, that is an assured outcome. You're going to create a massive disaster. Going to be costing me public money to whatever clean up the mess. I'm not going to bail you out, but clean up the mess. So you just don't do it. Okay. And I don't know, like an example. Okay. Maybe I shouldn't be saying this here, but it's the only example that I have in mind right now. The SpaceX IPO was not allowed to be sold in every jurisdiction around the world. There were a bunch of regulators that they said, sorry, but no. I mean, not because, I mean, I honestly, I said the proper valuation in the future. And, if something's happened and they deliver, SpaceX, my opinion, is worth like a shot, it's worth a buy for all sorts of reasons. But, in the current circumstances, I mean, should be very careful in allowing people to buy something because that's what happens, right? So, long story short, the regulators, the SEC, CFTC, the FCA in UK, the BaFin in Germany, whatever. The BaFin is one of the funniest one because they look tough from the outside, and from the inside, they're like soft like potatoes. Okay, they're like they bark so loud, but then they don't do, and then like they do all this investigation, and then they figure out, oh shit, that's our fault. They actually told us. We got like tipped the warning and whatever, and we didn't do anything. Oh, who are we gonna blame? Okay, let's not blame anyone. Let's carry on. That is how Deutsche Bank and Commerzbank, get away with their shit every single time. They're like, dude, you knew, you didn't do anything, so that means we didn't do anything wrong. You're like, okay. So regulators are not doing anything. They are eventually allowing this, so we know that this is gonna blow up massively, and then we need to gonna deal with whatever mess comes next because it's coming, no matter what.
Well, that brings us to this week. Besant increased the purchase of bonds by $2 billion. Do you think the purpose of this was to bail out Japanese banks and insurers, as I do, to prevent them from selling hyperscaler debt and creating crises in some of the more questionable companies, telling them to hang in there? Because it does seem that we're now using the Federal Reserve as a backstop for the Bank of Japan versus focusing exclusively on the American economic picture.
So thanks a lot for the question. This is a great question, and let me try, to step back and be polite. Let's say. I think that these people they speak very loudly. Okay, big announcement left and right. But then, I don't know if it's the same that you guys saying in English, but in Italy we say there is a mountain that gave birth to a mice. That's the literally translation. Okay, big thing, big thing, big thing, and then poof, right? So again, in the United States Treasury Department and in other departments like the defense, whatever, there are very intelligent people working there. I got to know some of them, by the way. The problem is they don't take the decision and they don't run the show. So you cannot have a economic policy by announcement. It's the equivalent of, being at a poker table. You bluff your way, you start winning a few hands. At some point, people call your bluff. You show your cards, you lose that hand, and then they get your game. So if you continue bluffing and people see the stack of chips in front of you that goes lower and lower and lower and lower, the lower the stack of chips goes, the weaker is your bluff, right? And at some point, you're going to be wiped, leave the table, and get spanked. Okay. This is exactly what happened this week. And paradoxically speaking, you know, roughly like 12 hours before, I wrote something about that because I had like, people, friends or whatever, like, reaching out to me and say, Dario, like the yields now, shall we like buy now? Like, treasuries, the yields is like very attractive and whatever. And then I was telling them, you know why you shouldn't buy? Because if the yields keep going higher, you get screwed. If the yields stay here or go lower, you're not gonna make money. You think you're gonna make money, but in reality, you're still gonna lose money because if in the current setup the yields go down, it's because they will eventually be printing so much money, putting yield curve control, QE, whatever, that yes, at the end of the life of your government bond, you're gonna get back the same nominal amount of money, but the nominal amount of money is gonna be worth much less. This is why bonds in general, and honestly, it's come from one that made a living out of that for a very long time, are the worst possible investment in the current environment. People think they're safe simply because they are less volatile, but they are less volatile because of the type of the instrument. But their value in reality is being mathematically eroded through time, and nothing is going to stop that till we are not going to see deficits disappearing. We're not going to see public government debt coming down. We're not going to see private debt coming down and so on. But there is a thing that is happening in the market as well. When a market becomes crap, becomes shit, a market becomes illiquid as well, right? So, and another thing that people don't realize, but traders know very well, is that is the last trade that determines the price for everyone. Okay, is the marginal buyer. What does it mean? If Dario wants to buy one share of Nvidia today at $1,000 for whatever reason, and then gonna be the very, very, very last trade on the tape of the day, price of Nvidia at the end of the session is gonna be $1,000. Okay, here I'm oversimplifying, but just to make you guys understand. So you're gonna see one share bought by Dario and sold by, I don't know, Jensen Wang at $1,000. Nvidia tomorrow is the first company that overshoots above $10 trillion market cap. The same applies to everything, not just shares. So what Besant attempted here basically was to increase the amount of marginal buying from each side, because when the treasury does something, people say, oh, it's only $4 billion. I mean, it's not that simple. Okay. There is a whole bunch of banks that are market makers on US treasuries. And these banks, they lose money in that business. Wait, why they lose money on this business? Is that bad? Well, they lose money and then they will be rewarded by the government with other business. That's how it works all around the world. It's always been the case. So in order to provide liquidity to the market, they lose money, but they get business as well, and on and on. So eventually, that move, at least he expected that move would have been supported. So for every dollar he puts on the table, he would have expected X amount of dollar of move, especially in the long end part of the curve, that is the one that sets mortgage rates, but as well is the one that is becoming more and more illiquid. You know, if you want to know the extreme case, look at Japan. There have been days where the 10-year Japanese government bond benchmark didn't even trade. There wasn't one single transaction. So if in that the reason why the Bank of Japan has been so good at avoiding rates to skyrocket for so long is because they control the market, because they are the marginal buyer. If someone comes with an offer that will tank the market, they say, listen, pull back that offer. I'm gonna buy you this at this level. You're gonna make more money. Fine. Okay, sure, it's fine. No problem with that, of course. Right. So this is like how the dynamic works. And the fact that that didn't work whatsoever is actually a very big red flag that it should be acknowledged by the market. Let's not forget that short-term moves, medium-term moves, and long-term moves are different. But what happened this week in the United States government bond market, that is supposed to be the low volatility, stable, risk-free asset, and whatever, is not really a big signal of confidence and stability. Far from it. And that is reverberating all around the globe. So when you have this situation, in theory, in the best assets available everywhere in the market, besides cash, okay, in theory, let me say this again, everything is going to cascade all around. And as we said before, in the same way, people for AI companies, you see lenders that are getting more and more worried, and equity investors that no, they're still very bullish. The same happens, you know, in the government bond market, because the government bond market, it will impact the cost of debt. The cost of debt will impact how much money companies can raise eventually. Because of the amount of money that can raise, there is going to be a high cost of servicing their debt. And if they don't make enough revenues, increase their margin to cover their debt, then they're going to see their free cash flow erode. When you see your free cash flow eroded, even if on paper you still have net earnings, in reality, those net earnings are going to be eroded through time. And low net earnings going down translates in the valuation of your shares going down. So, and this magnifies, okay? So this is, you have a guy that is like, okay, I feel almighty. This worked before. Let me try it again. And you know what? It was funny for me this week is that he himself criticized Janet Yellen for doing the very same thing he just did. I mean, man, come on, be coherent, right? So they have this announcement effort. They wanted to trigger the market, create a reaction, and effectively put yields at a lower level artificially, because there is only one way to decrease yields sustainably, is to stop borrowing money. You're paying more because you're borrowing more. That's it. And if you want to do like Japan, then you say, okay, I want to borrow more. I'm not going to pay you this. And this is the low. And if you're not going to do that, I'm going to take the money out of your pocket. Fine. The economy goes down the toilet. That's what happens. Right? So all these things are just like juggling around with stuff, trying to have, this short-term dopamine effect to market and trying to score a win or whatever for maybe other purposes, mostly like consensus and electorate. But the truth is that, it didn't change anything because it's a zero-sum game. And you wanna laugh? Next week, the total amount of notional debt that is going to be refinanced by the United States is almost $800 billion in all series of bills. It's a notional amount. Okay, if you have treasury bills expiring in 4 weeks, you're going to have 12 issuances in a year, right? But just this to give you an idea of what's going on here. And then the dude goes on CNBC and said, "We're gonna grow our way out of debt." I'm like, and that's funny because, well, you're supposed to be growing very strong right now, like other countries. Your debt is not only not coming down, but in real terms, it's even increasing. As a matter of fact, because it's growing faster than inflation. So, and here is what I conclude, because these people are faking the data. That's the problem. They're telling you the inflation is low, and then people like check their costs, and they're like, dude, I mean, they tell you that the job market is very strong, and then you realize that there are no more people finding jobs out there. Actually, that is minimal, is not lower. So the numerator, okay, of sorry, the so you have the employment rate, right? So you have the numerator and the denominator. At the numerator, you have the people that are working. At the denominator, you have people that are looking for a job. And it's not the numerator, going up, okay? Is the denominator going down. That's what's happening. Because the populations in the developed countries is aging and retiring, and baby boomers, they had a huge, birth rate at that time, are now retiring more and more. Then unemployment rate looks so low, looks so healthy, because people are leaving the workforce, not because new jobs are truly created. And then after 1 year, they even tell you, oh, 1 year ago, we overestimated the jobs by 1 million. I mean, come on, dude. Like 1 million?
Yeah, no one looks at what happens 12 months from now. No one looks at the annual revisions except for us geeks. And it's sad, but I'm going to ask two questions, and I don't want to abuse your time because I know you're the other side of the world. What I really want to ask is there not a misinterpretation of what the Eastern Chinese, Singapore, etc. banking system versus the American banking system? It seems that in our media, we try to apply our interpretation of financialization to the Asian version of financialization. If you talk to anybody from Malaysia, Indonesia, etc., it's a totally unique and diverse system compared and contrary to the American system, which I think causes a misreading on allocation of capital.
That's totally correct. As you said, I'm on the other side of the world right now. But I'm Italian, so I know Europe very well, and I spent a lot of time in the US recently, many years ago, and I was working for an American bank, so quite familiar with what you're talking about. And I can tell you by direct experience is that in Asia countries, broadly speaking, not just China, but other countries, the financial system is at service to support the manufacturing industrial system and companies. In this side of the world, you don't have much of this, like, sophisticated financial instrument that they are like sold to the public or whatever. Actually, the things in this side of the world are rather plain vanilla. They made their own mistakes in the past, and like everyone does. Fine, they're dealing with that. Fine, okay. But here in this side of the world, the banking system is lending you money, expecting you to repay that money, not to roll over your debt over and over again. I and you can see that in many indicators. Like look at credit cards. I mean, in China, for example, they're at zero. I mean, if you cannot afford to buy something, like if you cannot afford to buy a new phone, you're not gonna buy it. You're not gonna like put it on your credit card and then repay it later or whatever. It's just not the culture. And if you go to the bank and ask you, oh, I want to, you know, borrow money to go to have an holiday, let's say. This is not a joke because it's happening a lot in Europe and the US, by the way. And this is another indicator of when things are really get close to break because it's happened the same thing I remember in 2007. People are like, how are you going to repay me for that? Okay, with your salary, okay. But if you cannot afford it now, then it means that you will have to cut back on something in the future in order to repay me. And then they start looking at what you can cut back. And then they realize, okay, if you cannot cut back your food, you cannot cut back your home and stuff, means you're not going to repay me. Means that instead of repaying me in whatever, 5 installments, I have to wait 20 installments or whatever. Right. And in Asia, if you don't repay your debt, I mean, they're not going to lend you money anymore. It's actually like yourself, your relatives, and anyone else. It's such a disgrace because that's how the culture it is. While paradoxically, on the other side of the world, they tell you, oh, going bankrupt is fine. Actually, I even heard people saying, I'm happier to lend money to someone that already went bankrupt once because he knows what does it mean, and this next time I have a higher chances to get repaid. And I'm like, dude, you expect like I mean, this is such a wrong way of thinking. The people already showed you it doesn't have financial discipline, and you expect it's gonna have financial discipline, and we go back to the same logic of the drug addict, right? So what you said is completely correct, but not just for the financial system, for many things. But the financial system, like they see, in the West, they see like all this hyper financialization of everything. Why do you guys think there are all these data center popping up left and right? It's not very different from subprime almost 20 years ago. It's because the financial system needs assets to be repackaged and sold as financial instrument. That's how they make money. Banks in the West don't make that much money anymore just being a bank. Just getting deposits, borrowing some certificate of deposit, whatever in the short term, and lending that money, expecting that money to be repaid and sitting on there, managing the debt. If you look at the operation of the financial system in the West, the amount of revenues coming off what is called in jargon fees is overwhelming compared to the interest income. And that's the only way they have to grow because there's not much way you can grow your net interest income without expanding your balance sheet, but they will not allow you to expand your balance sheet if you don't put more capital. And then if you're starting to become too big, they will start stopping your ability to expand your balance sheet. So how can you make more money? How you continue to grow? How can you get the shares of your company, of your bank to keep going up? You need to get more revenues, right? And when you get more revenues, you need to make more fees. And how you get more fees? You need to find more activities to get into and clip that fees of your brokerage services. So on one side of the world, the assets are created with the purpose of being repackaged, resold, and financialized. On this side of the world, The financialization comes first. They lend you the money to then build the freaking asset. And off the revenues of that asset, you're going to repay the debt. So if you apply the same way of thinking of the West today, that's why people look at the numbers out there and they're like, oh my God, they must be living so bad. Like, oh, what's happening here and there? I'm like, and then like my answer to people is like, just like book a flight ticket to wherever you want, to Singapore, to Vietnam, to Malaysia, to China. Okay. And then you come and see. Like, look at like Vietnam with all the steel issues that they have been exactly developing in this way. Okay, because this is how the banking system works. Of course, like, every time you might have scandals, you might have like people doing bad things, but this is just human nature, like it happens everywhere in the world. So from one financial system that is supporting the backbone of the economy to a financial system that is pillaging on the economy in order to benefit itself. So it's twisted.
You nailed it. And I appreciate that explanation because a lot of people don't understand that. If you've never dealt with Asian customers or with Asian businesses, you do not comprehend the purpose of financialization on that side of the world, which is why our government and our banks are demanding the same type of system be imposed on their people, even though culturally it's not acceptable. With that, Dario, I want to sit there and hit the big question because I think once I ask it to you, you're going to let loose like I have. It's been my contention for months, since June, that Anthropic has to rush the IPO to market this month. And that because of his ego, Sam Altman will rush OpenAI to the market in September. Anthropic more so in the next 10 days because why? You've got NVIDIA reporting. They can ride the coattails, get a big kick. Everybody takes their cash out, makes a big profit. Hooray for the founders. OpenAI, same thing. But both companies can issue those IPOs knowing they have a backstop because of the interest and the DPA, which is the Defense Production Act, which allows a backstop for them that if they get in any kind of financial trouble, they can get a government bailout from the Defense Department using this act. We're going to see these IPOs, but are the valuations going to be anywhere close to reality? And secondarily, with those IPOs going to come more bond issuance. Which would you watch first? The bond issuance that follows or the IPO that hits the markets and the headlines next week?
Okay. First thing first, all I see so far is a lot of marketing and PR. Did anyone out there saw the numbers? A real one. I mean, you go on the SEC Edgar website, you type in the search bar Anthropic, OpenAI, or whatever, and you get a form that is called S1 form. And that form tells you how the business is doing for real. Question, did you see that?
Not yet. It seems like they're going to wait till the last minute because Citibank is the latest one to sign on for this circus. So
Well,
apparently
they,
someone is seeing the data, but you and I are like not privileged to this as far as the so-called peripheral investor.
they're gonna wait till the last minute, but there is a small issue here. They cannot file the S1 publicly and then go IPO the next day because there is a window or period they need to wait first in order to fulfill market rules. Okay, I don't remember exactly the market rules, but this is how it works. And a good example is SpaceX, right? That, to be honest, has been, they went out there. These are my numbers. Okay, people right in front of them. They saw the numbers. They saw the fact that SpaceX, despite their name, filed registration as a data center and computing company because that's where it expects to make 90% plus of the revenues in the future. Fine. Okay. Rockets
Hold
are
on
not
one
going
moment.
to.
I'm going to tell you something that I forgot to bring up. Anthropic has confidentially submitted a draft S1 to the SEC, but not a public filing, which makes it even more challenging. That because my understanding is yours is it still has to be brought forward public at some point, correct?
Yes, that's correct. That's correct. Basically, when you submit a draft privately, you start the approval in theory. There should be a review process, and the SEC tells you, oh, dude, you cook the numbers. You're not going to go IPO because no, it's safe to the public. But nowadays, they're rubber stamping everything. But they still take a little bit of time to rubber stamp thing because, they have to take the paper, stamp it in an office, then walk to the next office and stamp it. And then maybe a guy is working remotely. They need to locate it. They need to stamp it again. Now I'm joking, but you get my point, right?
Absolutely.
And maybe they need to grease a little bit of machines on the way because sometimes you wonder how they could literally allow some companies to go IPO. Like we work. I mean, I don't know why you're not supposed to approve that, but anyhow. So still, you go public. The S1 is to buy publicly, and then it needs to have a period or you stay public because before you go to appeal. So all this thing that these people are saying right now, I'm there every day. Oh, we increased the ARR, annualized revenues, by X amount. Wow. This morning I increased my annualized breakfast by 5 times, actually, because I was particularly hungry. And then I poured a little bit more yogurt and biscuit, but that is not going to mean I'm going to eat, you know, 5 times the amount of breakfast for the whole year, because otherwise I'm gonna choke himself and freaking die. Right? That's what they're doing. They get like a good window of revenues for whatever reason. And the reason most of the time is like they sign contract with huge, POC period where the customer doesn't pay, and then in the future they may start to pay if they confirm the contract, or they agree on massive discounts and so on. And then they have this bump of revenues in a specific window. They actualize them, similar to what Enron did, by the way, mark to market accounting. And then on top of that, they annualize them. So they actualize them first, and then they annualize them. They multiply by 12. Like, fine, okay. This is what you're telling us. Show me the numbers. Show me the cash. Show me how much money. Why do you don't? Your numbers are so good. This is what I'm saying. I mean, as a basic logic, if your numbers are so good, why aren't you showing the numbers? So, what's the answer to this? And I tell you, the reason is at the end of the day, you need to have people signing off on those numbers. Management that, considering their level of dignity, they might sign off on anything just to get ahead and hoping to get away with it. But then you need to have banks, you need to have the auditor, and so on, right? That's how the thing works. And then when you try, I mean, if you want an example, look at what happened to SMCI a few years ago. No, SMCI was smuggling chips, okay, for NVIDIA at a corporate level. I mean, it's not, before I was saying it, before anyone would believe me. There is even that famous post I put on Twitter, like, wait for the moment when the FBI is going to show up to their offices. I posted that almost 1 year in advance, okay? The FBI showed up in their offices and they said, oh, we had a dude in the board of director was involved into that. Somehow the company didn't know. Okay, fine. Okay. Then what the thing is that you have the numbers, so you need to justify what's happening. And at some point, the things became so smelly that Ernst and Young said, okay, you know what? I mean, and those companies already, the auditors, they're not really famous for incredibly high moral standards. They signed off on all sort of craps in the year. Imagine the degree of crap that they saw not to sign off on that. They're like, dude, here I cannot even argue me to stay out of jail. I mean, I'm signing like, I'm gonna go to jail if I sign this for sure. I cannot even argue. And they just left, slammed the door on their way out. And that company didn't file financial statements for years. So that's an extreme case, but again, so far, it's a lot of marketing. Okay, we're making X, we're making Dex, a total number of user here, total number of user there. This is the growth. Okay, fine, good. Show me the numbers. That's it. So, and right now there is clearly a rush to grab whatever liquidity is available in the market. Obviously, even Nvidia issued bonds, issued debts, something that anticipated too, because what I tell to people is like, you need to understand that circular financing and revenues round tripping, that, to be honest, is a fancy way to call a Ponzi scheme, to be fair. Like a Ponzi scheme, you need to have more cash that comes in than cash that goes out in order to keep growing. That's how it works. So once these guys will have sucked up all the venture capital, they will start in their own cash, and they have no other ways to go around. They start raising debt. That's what they do. They need to keep more cash in than the cash that goes out. How the cash goes out? All the shareholder buybacks, paying all the developer expenses for the center and on, their supplier and thing, because at the end they have to pay. So cash in and cash out. And so now you have, I mean, Broadcom issuing bonds, $60 billion to do what with that? To be like Scrooge and then create a vault and dive into them. What the hell am I gonna need that money? Broadcom. And to be fair, I have respect only for one company in all of this mess. And the respect of this company is TCMC. Why? Because the guy goes.
Because they actually manufacture something. They
No.
actually produce a good.
No, I tell you, the guy there, he knows what's going on. He actually said that. Nobody paid attention. He said, we are not gonna, we've been a company, we've been in this business for a very long time. We know how these things go. We have seen companies doing wrong things and going bust. Now they're telling us they will buy this amount of chip from us. And I'm like, okay, good. I'm not gonna upscale myself, till I don't see the cash. Yeah, I'm happy about your promises. I'm gonna grow my capacity steadily. But if you want me to build a new plan to fulfill that promise, I'm not gonna raise that and hoping you pay. Like, show me the cash. That's what TCMC is doing. And TCMC knows their share price is gonna go down a lot. They know that. They know that what they're doing is not gonna be lasting forever, because they know they're in a cyclical business. But their share price is gonna go down much less than compared to other. Why? Because they're not freaking raising debt. So their shareholders are being taken care of eventually in the long run. That's a company I have respect for. Is completely overpriced, but at least they're not acting dishonestly, like SK Hynix, Samsung, and others. Like SK Hynix did an ADR sale in the US that it was like so ridiculous. I mean, if you ask people knowing about memory, about SK Hynix, they will all laugh about that. They were like, that was such a crap company. Now all of a sudden they are a trillion company. Like, dude, that's not the case. They're a really crap product. And by the way, those memory chips, they were a cartel. There is only one company. So now there is all this rush to liquidity. They're trying to get whatever they can get. I mean, the moment I saw Google issuing equity, I was like, what? Google? Like 40 years? I mean, equity is supposed to be issued by small freaking companies, not by, trillion plus dollar companies. I mean, what the hell is going on? You're clearly trying to get all the cash you can. And the sad part of the story is that they got a good chunk of that cash from Berkshire Hathaway. That, I'm a big fan of Warren Buffett, but clearly the future of Berkshire is not going to be good because the people that are there are not Warren Buffett, obviously. They're just normal people that, like every other manager, they need to get their shares to go up in the short terms to get their payout, and they don't give a fuck about the long term. Otherwise, nobody would have invested in freaking Google equity in a private placement right now. So they're trying to get all the cash. That's why SpaceX IPO very smartly went first. But no, there is still a hurdle. I mean, with all the freaking happening in the regulation and agency, whatever, you still have to do the bare minimum. And again, they can talk as much as they want, but till they show the number, you know, I have more respect for Michael Saylor than these people. People criticize Michael Saylor. Now, Michael Saylor, he did all the filings and everything. He filed all the forms and things. And they criticize him for doing exactly what he said he would have done. That is something incredibly stupid, yes. But why nobody criticizes who gave the money to him? Why nobody criticizes the asset managers, the pension funds, the insurance and whatever? They gave him the money for him to do exactly what he said he would have done. And you cannot an excuse is not I didn't read them. That's another excuse. At least the guy, he said, I'm gonna do something that is incredibly crap and stupid. I'm telling you. And the reason why he did, because he was the man with that, but at least he did the filings. He did the homework. These guys are not even doing the homework. So what are we even talking about here?
It is one of the great bluffs of history, and I totally concur. Dario, thank you for the extra time tonight. You have been absolutely fantastic. I honestly think you should write a primer on why deflation is not as frowned upon in China as Americans and Westerners think and their banking system. You do a great job on your Substack. And the Westerners really need to understand that their fear is inflation, our fear is deflation, but we've blown it because we thought debt would be the great answer. Please advertise your Substack, advertise where to find you on social media so everybody can start reading and becoming more intelligent about what's happening in the economy globally today.
Thanks a lot. So I just launched premium subscription on a new platform. It's a startup that is called Slice. And the reason why I picked that is because it had all the tools. It's the first platform that had all the tools for me to deliver premium content in the way I do. So I choose that, and but still, to be fair with you guys, as everyone sees, I keep doing on X everything I kept doing. That is just a plus because the problem of X and when you have a lot of follower and you know, mass communication is that you need to simplify things. That's my issue. So the reason why at the very beginning, years ago, people were not understanding me because I was not talking in the right way. That's the truth. So, and many times what I write on X, I need to oversimplify stuff. And some people get it, more and more people get it. I also improved a little bit in that. So because maybe I'm not a native speaker, so sometimes I use maybe some way in English to say things that the native speakers wouldn't do. So it maybe gets a bit to get there. But when you have like this big social media platform, you need to delivering premium content. It's not simply possible, right? Because you need to communicate a lot of people with different expertise and whatever to get your message. So I launched this subscription on Slice. You can find the link on my profile. It's actually, it is a great tool personally, and it's a completely different thing from X and what's available elsewhere. But of course, as you can see, I'm still here. I love to be here. I have X subscription where I actually post some stuff, but it's mostly like a support to myself. And then like recently, I launched like a YouTube channel. But to be honest, you know, when people complain about X, I'm like, try to go on YouTube and see what's going on there. It's even worse. I do that because so many people were asking me to do podcasts because people don't read nowadays anymore. They need to watch things, they need to listen to things. They have to be able to, I don't know, scroll their Instagram on the with a left hand and have their earphone and listen to whatever podcast and thinking they are like paying attention to that. So I'm like, okay, let me do a podcast and whatever, because I was writing, because as you can see, I'm not very good at talking fluently. So that's why I was writing. But now I started to do podcasts to that. So I'm on YouTube as well. It's growing, almost 10,000 followers, but it's a hell of a crappy of a platform, to be honest. So that's where I am, and I'm happy for the invite here. I hope my you guys had a good time with me. Feel free to reach out to me if you guys want to have like there are ways to reach out to me. I'm always like available, mindful of the time, because many people do every day. So I take a little bit to answer, but I tend to answer things. I read to the comments and stuff, and I do my best job, in rewarding people for taking time to write me a question or a comment or something. Sometimes it's just like, it's practically difficult when you're a single person with two hands and only one brain and a limited amount of awake time during a day. So, because I don't use bots or things or crap, like others do. So,
Dario, thank you so much once again. Everybody at Dario, Dario CPX. This guy, so we've had several conversations with him here on MacroEdge Radio. Every time I've learned something new, our listeners learn something new. It's important to get a variety of experienced speakers and writers onto this program, because you're not going to hear this on the financial media. You're going to get a can of dog crap, basically, from financial media promoting XYZ equity, XYZ bond. Hey, we got something to sell. But in the meantime, listen to what this person has to say about this. This is important because you need to diversify your opinion, not just your portfolio. Speaking of which, next week is Jackson Hole. And somehow, by some stroke of luck, barring technical difficulties, airlines screwing with the schedule, or the internet deciding to take a dump, we should have Danielle DiMartino Booth joining us post Jackson Hole speech by Kevin Warsh, his first one. And while most people say this is the most important Fed meeting ever, this is the most important Jackson Hole ever, the truth is what he says next Friday could move the markets for the next 90 days afterwards. Don't think that this is just a regular speech. It's the influence and the direction he indicates. He'll either say, I'm a dove with a hawkish angle, or I'm actually going to take this seriously. Personally speaking, I'm not going to offer the commentary on air. You'll have to read my take at my blog at johngaltfla.com and at macroedge.net. Real quick, macroedge.net/ozone. Get your 2-week free trial and buckle up. This is the end of the holidays coming up. We're going to come to Labor Day, and all hell probably will break loose shortly thereafter. for MacroEdge Radio. Thanks again to Just Dario and all of our listeners. Good night now.